Switching gears here, Credit Suisse, that is trading lower here pre-market by about 7% from what I'm seeing on my screen, 8% as you're seeing there in real time in the extended hours. This is ahead of the open after the lender warned of lower than expected profit for the second quarter as the war in Ukraine drags on. Credit Suisse also cited additional headwinds such as tightening monetary policy, heightened volatility, and weak customer flows here. They also added, as we look forward to the second half of the year, 2022 will remain one of transition for the company here, and investors trading down Credit Suisse here.
Well, there's no surprise here. I think Credit Suisse continues to be viewed as one of the worst run Wall Street banks around, whether it's on the expense front, how they handle employees, in terms of the executive team, in terms of the bottom, even well down the rung. But what I would be concerned about if you're an investor in the bank space more broadly, some of the things that Credit Suisse did highlight in trading activity, deal activity, that of course has broader ramifications on bank earnings more broadly. And it comes alongside bank stocks have been on a nice run the past month as yields have climbed. And I think some of these bank investors could be surprised when these companies report in a few weeks.
Maybe so. And we should mention as well, when you talk about the expenses, that there are some reports now that Credit Suisse is considering cutting jobs, so therefore cutting expenses. But analysts here do seem to be saying that this is largely a Credit Suisse problem, that even though that market volatility is something everybody's experiencing, that other banks are actually making more money because of the increased volatility versus less money, at Credit Suisse. So we'll see. I'm just saying it's an open, it's not a foregone conclusion that as Credit Suisse goes, so the rest of the banks go. I think we're going to have to see how different banks are navigating this environment. But clearly there are challenges out there. This is the worst example.
I'm 75% with you. I would be 100%, except we had J.P. Morgan CEO Jamie Dimon warn about economic hurricanes,
setting the bar low.
Which has me concerned about how they may have done too.
He knows what he's doing.
There's a bit of yin and yang within J.P. Morgan right now, if you ask Dimon versus Kalanovic as well at this point.